Hi there, Serial Trader here. Let's do a little check-in with the major US indices. Alright, so as of today's price action, so Tuesday, we're sitting right here on this BD trend line, and I'm going to start leaning more on this contracting triangle wave 4 interpretation for SPX, and then that implies that we're going to have a wave to new highs once we really break out of this triangle. And of course, although still possible, this wave 3 of 3 decline setup just doesn't really feel like it's working for me right now. And it would have to decline a lot and in a short period of time for me to start to reconsider this one. But that being said, it has not been invalidated yet, which we'll get to in a second here. So what looks more probable at this point is this contracting triangle. And, well, if I go in a little closer here, let's go to a 4-hour. We'll make it the hourly. Okay, so we had this D-wave peak here. And then we had what looked like a very 3-wave decline, okay? And if you just want to call that, maybe a WXY, a double zigzag decline, that works for me. The subdivisions support it well enough. So if we had a WXY, something like that, okay. Well, we actually, and that's WXY for wave E, okay. We've actually taken out just ever so slightly the X wave high, that resistance level of 2682.92. And we actually went as high as 2683.35, okay? So that's reasonable development to support a bullish outlook. And of course, it's only natural, at least when you first start to break resistance, to have a little pullback. And if you look, we've actually just pulled back and we're just dancing along this BD trend line, possibly getting ready to launch off of it, right? And well, if we go in a little closer even, let's maybe do a 15-minute. So off the bottom of wave E here, okay, and you can see there's an Elliott wave pattern developing, even on this 15-minute chart. And let's just take a stab at it. Maybe that's a 3, 4, and we're going to be coming up in a 5 for the first wave up of possibly many more impulse waves up. We'll have to see. And let me just drop the degree way down here. I mean, it should be really short term. Minute, sure. And so that's possible. This certainly has the substructure of an impulse wave that's not yet complete, and this looks like a very corrective pullback, right? And you could make the case it's just ABC down, something like that. But I don't get too wrapped up in the real short-term structure, but it's nice to see when it's there, and it is. Just get rid of that for now. And okay, well, I think we'll just migrate on over to the candlestick chart now. And okay, so we had that bullish engulfing on Friday, and that implied that the next 3 to 5 candlesticks, just purely based on candlestick buy signals, the next 3 to 5 candlesticks would be in that direction. And so far, we have been up, at least the initial candle, and the next day just kind of flat. So we've basically had 2 doji stars in a row, but those certainly aren't down days. So if you had another up day or 2 up days, that was still a pretty decent signal as far as implying direction. And if you notice, we're still above the T line and closing above the T line and also above the 3T line. So there's really nothing wrong from that perspective. And we're not overbought yet or anything on this oscillator, and this oscillator is very sensitive. So overbought certainly doesn't mean sell, and oversold doesn't mean buy, but it's just a good early visual indicator of conditions becoming more extreme, at least short term, and that's not even the case yet. So this 50-day simple moving average, so far providing a little bit of resistance. If we smash through that, and more importantly, as I've been, I don't know for how long now I've been stating, if we get past this doji star high at 2717.49, that will be a very bullish development that would warrant a more aggressive bullish stance, I would say. And then certainly ultimate confirmation in my opinion, would be above this high, and that's that 2801.90 on SPX. Okay, so still cautious here because we really need to break some resistance levels to get confident. But I'm really not liking the bearish outcome here, unless this thing just falls out of bed very quickly, and it has not done that yet. Okay, and we'll move on to the Dow Jones Industrial Average, and very similar picture there. And 2 doji days in a row above the T line, really all the same on the Dow as it was for the S&P. So I won't go any farther than that. NASDAQ composite. NASDAQ maybe slightly stronger. Perhaps tech is just regaining its leadership role. We'll have to see. But again, just a couple of indecisive days. Certainly today was a doji. Monday not so much, but today was a doji. And still closing above the 3T line and the T line very comfortably. And we need to break that doji star resistance, although it looks like we're closer to it on the NASDAQ than on the S&P, for instance. But it'd be nice to get through that. Perhaps the NASDAQ will be the early confirming indice, and that will certainly add confidence that the other indices will follow. So we'll have to continue watching this. Tech appears to be a bit of a leader again, according to the NASDAQ. And VIX is still in a very benign, non-threatening state. So as long as that continues, that's certainly a bullish state for VIX to be in for equities. And not much to say other than that. All right, well, hopefully everyone's having a good week and trading well so far. And that should wrap it for now. We'll check in if there's any more compelling price action this week. All right, Serial Trader signing off.